Alrighty. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Everspin Technologies because this stock is up over 600% in the past year. This is ticker MRAM. And this company only has a market cap of $1 billion, only 85 employees. They're not a big company, but they have come a long way because a year ago, the stock was $5 and now it's 43. As you can see, the valuation is insane on this. We're looking at over 4,000 times earnings. It's not very often you see a valuation that high. This company was founded in 2008 and they engage in the provision of magnetrosensitive random access memory solutions. It provides its products include toggle MRAM, spin transfer, torque MRAM, TMR sensors, and embedded MRAM, whatever that is. So the reason the stock is up, let's get into some of this news here. They have drawn fresh attention after securing subcontract agreements tied to its toggle MRAM technology for U.S. defense programs, along with first quarter results that showed higher revenue and a smaller net loss. Very nice. The recent subcontract wins and earnings update arrive alongside a sharp shift in sentiment. 30 is up 300%, blah, 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 blah. Then we have revenue of 56 million, quarterly loss of 0.3 million, so basically nothing, and a market cap over 900 million. The question now is whether recent defense contracts and momentum the upside on the table or if the stock is already done. So let's get into some analysis we have provided here from Claude. We can see they manufacture and sell, I'm going to try to pronounce this word again, resistive. I don't know how to say that. But whatever. Random access memory MRAM technologies across the US, Japan, Hong Kong, Germany, Singapore, Canada, and internationally. It offers toggle MRAM, spin transfer torque MRAM, tunnel, magnetosensitive, magnetoresistance. That's what it is. Magnetoresistance sensor products as well as foundry services. The company serves industrial, medical, automotive, transportation, aerospace, and data center markets through OEMs, contract manufacturers, and original design manufacturers. They are, 18 years old, headquartered in Arizona. The stock's been moving a lot. Revenue was $15 million for the past quarter. Let's see what that looks like on the chart here compared to previous quarters. So yeah, $15 million, which is basically flat. So they're really not doing anything. And net income and free cash flow has really gotten worse. So it doesn't make a whole lot of sense here. The product sales is up 28%. Licensing is down. Gross margin is slightly improved at 52%. GAAP net loss of zero point 0.3 or okay, so they're still losing money. Non-GAAP net income, $2.6 million. What yeah, so they're yeah, so 284,000. Okay. With minimal debt, about 16 grand long term. Everspin is not running on fumes. Total 25 revenue was 55 million. Okay, so let's look at the I need to see the valuation for this. So the shares outstanding is increasing. That's not good. 40 million in cash. Again, it's only $1 billion company. There's only 80 employees. This is like a small shop like down the street that you would find. So, price to earnings has gone from pretty much being negative to now 4,000. That's nice. Free cash flow yield was 7%. Now it's negative. Price to sales, you could have paid 2 times sales. Now you're paying 17 times sales. So this is just a stupid valuation. If anybody owns this stock, I would definitely sell it. That's what I would do. In April 2026, they announced a 40 million 30-month subcontract with Amentum Services under a U.S. Navy microelectronics R&D program, trying Everspin's toggle MRAM process technology directly into U.S. defense priorities. The company also signed an initial 10-year foundry agreement with Microchip Technology to add onshore manufacturing for MRAM and TMR products. They are from Oregon, fabrication, collaboration, and planning to ship in the second half. Okay, so basically, it sounds like people are paying 4,000 times earnings because they have all these deals now, and this is going to hopefully guarantee a whole lot of growth in the future. So they're at $56 million. So maybe they keep going. I mean, honestly, their sales can double. What does Yahoo have them doing? Oh no, never mind. Okay, there's not much growth in there anyways. 25% and then 12%. That doesn't make any sense. The price to sales, and this should be like a 4 then. This does not make any sense. 0.03, 0.15. I don't know then. I would think there should be way more growth with these deals and this valuation. I don't know. Design wins rose to 238.25, and management expects those to move into production. They are also positioned as a key MRAM provider for AI, edge computing, and defense and all hot themes. U.S. Microchip Alliance. Okay, only 2 analysts cover the stock. One rates it to sell and one to buy. Revenue growth assumption in updated models is 16%. That doesn't make any sense. How is it? They are a legitimate niche semiconductor company, the world's leading MRAM maker. Okay. With real revenue growth, how are they the world's leading MRAM maker if they only do 50 million in sales? With real revenue growth, improving margins, a clean balance sheet, and a meaningful defense contract, the fundamentals support the direction of the story. However, the stock has tripled. So, like I said, I would definitely sell this because I don't understand. I can't understand why the stock is even at like, let's see, they're doing $70 million. The growth is only 12%. It's 25% and then 12%. What if the revenue has been growing only at whatever, 5 or 10% per year. I don't know why the price of sales isn't like a 3 on this. Like this should literally be like a 300 like a $200 million company. So if I were to fairly value this, I would have the stock drop 80%. Which again, it looks like, just now, just this last couple of weeks, the last 2 weeks, it's turned into this ridiculous valuation. If you go back to when it was $8 a couple months ago, that would have made a lot more sense. That's almost an 80% drop. So that would make more sense is when it was trading at these valuations. Who knows? Maybe this is a short squeeze or something. I don't know, because this sure looks weird. I don't think this is definitely not going to hold. I maybe I should try to buy some put options on this. That is my analysis for Everspin. If you are holding shares of this, please comment down below. Tell me what your plan is with this and what you were thinking when you bought it. I guess if you bought it at like $8 or something, it was a lot. There's a lot less risk. But I don't see how I don't get the bullish story here because they're not even growing that much. So otherwise, I will see you in the next video.